Bitcoin has been ranging between the 29,800 and the 30,500 levels for a few days. Gareth says that these levels will break at any moment and even predicts the next target for Bitcoin. Either it breaks down or up.
No, and that's the amazing thing about it. So these calculations and figuring this out go to charting and go to many, many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin. So the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021. And it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, no one's listening to me. I mean, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here. So number one, it's the even number of 30,000. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level.
So there's a selling pressure at around the 30,000 level that is not allowing Bitcoin to break the 31,000 and stay there for a few days, marketing the start of the next move up. Also, Bitcoin is struggling, as we've discussed before in previous videos, because there's not enough liquidity in the market to make it explode. The movements we're seeing are just the result of retail investors selling their altcoins to put everything on Bitcoin, as the Bitcoin dominance charts show. And there's a reason for that.
We don't know any of the security classifications now that have to do with what the securities of crypto will be, and I think that's just keeping so much. I mean, I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance, based on the chart, it's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%. The two scenarios are Bitcoin falls a little, the altcoins fall a lot, or Bitcoin rises a lot and alts rise less. And so either way, this just kind of continues to impress upon investors that probably the place to be if you're holding for the next 6 months is in Bitcoin, 6-12 months. If you're playing quick little trades, obviously alts can outperform, but for the midterm, it's probably Bitcoin is your best play in terms of return. You have a risk-on environment, and the alts usually go nuts. But you know what? Exactly. The alts are seeing this major kind of infusion or of fear from the SEC, right? So that's really what's going on here is like the SEC has now made it so that you don't know if an alt is worth 10% of what it is currently, or if it's worth 10x of what it is right now. And so without clarity, it just keeps so much money on the sidelines. But I'll tell you one thing, and I've said this to so many people, that if we get clarity with the alts, like let's say they come out with rules for these altcoins that are securities, and we can see clearly, then we can value them. And you might find that like a Polygon or a or Cardano is maybe valued way too low right now. The other side of the coin is it could be the opposite too, and that's what we just don't know as investors.
So, according to Gareth, what would make Bitcoin break out?
Breakout, if you're looking for what that could be, it could be a approval of a Bitcoin ETF. It could be the stock market continues to rally and risk on continues here, in which case eventually you would assume risk on means Bitcoin heads up as well. So those would be the positives that investors should look for. The negatives, which I think there's more negatives out there, if you see the stock market topping out, let's say the stock market even has a 10% correction from this massive run we've been on over the last, since October of 2020, if that starts to panic investors, do we see exiting and a breakdown on Bitcoin? So for me, it's watching this range. Obviously, it's a very tight range, and whichever way it breaks, I would go in that direction in the short term. And so I think at this stage, if fear hits the overall market, and we've even seen this during COVID, even gold early on in COVID sold off, and that's like the classic risk-off asset. And so I do think that right now, investors should assume if you have a stock market sell-off, you'd also get Bitcoin to come in a little bit. And I think also just take a look at this. I mean, we were on April 14th, Bitcoin hit 31,000. That was April 14th. We're now at July 7th. And think about what the NASDAQ has done. The NASDAQ has continued to go up, at least 5-6% since then, maybe even 7 or 8%. Yet Bitcoin has not been able to break up. That's concerning for me as an investor. That's concerning for me as an investor, and has to be kind of monitored.
So what's Gareth doing now while Bitcoin doesn't make any major moves?
I'm short a little bit right here, just looking for a breakdown. My cover is very obvious, like we talked about, any 5-day close above 30,500. It's a simple, easy, low-risk trade because the risk is minimal here. It's only trading $200 below that level. So for me, I'm a risky trader. That's what I do for a living. For the retail crowd, I would say sit on the sidelines and watch to see if we get above that 30,500 level for those days. And then if you want to hop on board to 35, I think that's open to do. So that would be the way you would treat this trade on Bitcoin. The sideways consolidation is known as bullish consolidation. I'm skeptical of it because of its lack of performance with the NASDAQ. But again, if it does what I said it could do, then you do have a clear shot, or at least you should have a clear shot to 30,500 or 35,000.
And in this video, you can see why altcoins are getting destroyed and the money is moving to Bitcoin. There's undeniable proof of that in the charts Ben Cowan showed.